Hey everybody, welcome back to Trading with ThinkScript. My name is Mike Fairbourn, Senior Manager Trading Derivatives at Charles Schwab. Hey, today folks, I want to start off first with a basic ThinkScript scan to show us price momentum occurring. But then what we're going to do, we're going to go back and we're going to see how this change, actually what happened before this price momentum, and maybe getting back to the earlier phases of what the actual shift can look like when momentum then starts to occur. And what I want to really talk about today are double divergences. And I'm going to share with you a script to help us along the way. But we're going to start off first, though, with that basic script before we get going. So with that, everybody, hello to you, Richard. Recognize many of the names in here. Greg, Michael, Scott, aloha. Hello to you, Will, the sunset guy. And we've got Chris and others in here. Wiley, good to have you on board. Some new names as well. And would love to just let you know, that we meet here same time, same place every week to look at ThinkScripts. We do take topic requests in the chat box as well. Try to address those. And hello to you, Riceberg, and others here, folks. I'm joined in the chat by a good friend of mine, Kevin Horner. He's also a colleague, of course. That's why he's on with us. You can't just be a friend and jump in on the chat. You got to be a colleague as well. And welcome, Kevin. Good to have him. You'll see him in the chat as KH. Folks, you can follow us on X. Kevin's got some great stuff there. Kevin Horner CS, Mike Fairbourn CS. And on that note, let's turn it over to some disclosures to get going here. Now, the information here is for general information purposes only, should not be considered an individualized recommendation. Now, the paper money software application is also for educational purposes only as well. Backtesting results. They are hypothetical, and there's no guarantee that the same strategy implemented today would produce similar results going forward. Now, investing involves risk, and including for some products more than your initial investment. Like we always say, past performance of any security strategy does not guarantee future results or success. A quick look at some of the futures disclosures down there. Again, we don't trade futures in this class, but we do like to reference those futures charts from time to time. So just like that ability, and it just states here, futures and futures option does involve substantial risk, not suitable for all investors. So with that, let's go ahead and just tune right back into the markets here. See how we're holding up in this long, folks, how many times have I said it? Long and extended range. We're still in that range. We happen to be towards the bottom end of that range. Right over here, do you see this? Right there. Yeah, we're kind of like right in that range over here. We did dip a couple of days ago. Of course, we did reverse back down to the range. The question was, will we bounce up higher here? You know, it's so interesting right now. It's so difficult to read because who knows what's going to happen specifically. I think a lot of the recent volatility, clearly, I'll pull it up right now, in the VIX, is tied in to the uncertainty within the war conflict. And you can see as we are now up again, we're above 25. This can create some volatility. We're going to tap into some of that volatility today in terms of ways to spot maybe changes in a little bit long-term to intermediate-term volatility. We're going to start off with that basic script first, but we are above 25. And let's just state this. Let's just look over here. We like to do this because, whatever ThinkScript you're looking at, bullish or bearish, it can be helpful to kind of get a general sense what direction the market is going or could be going. Look over here with me, folks. We've hit this level a few times, have we not? Happens to be right around 2750. We've had what we would call, even on the resistance in terms of volatility, a tendency to really back off this level. And if something like that were to happen, well, maybe the S&P 500, which is up here and, very often, obviously, has a key tendency to trade inversely to the VIX. If it's trading down here, it might, if we do get a VIX pulling back down, break up. Of course, if the VIX extends above, and I've actually got to look over here, far left-hand side of your screen, folks, we took out that 2750 over here, we dipped, but then we broke above it here. Yeah, we'll, highly likely, you make a move like that on the VIX, we'll be doing one of these. I'll even change the color. We might go below that channel, right? So it's interesting guide. Whether you're just trading the markets, we do trade ThinkScripts in this class, but trading is definitely part of what we do, and we've got plenty of current examples to look at. But having said all that, let's get rolling, okay? All right, and Riceberg's got some interesting icons for us to take a look at in the chat as well as Will. All right, let's do this, everybody. Let's go into our, there it is. Gosh, what would we be without the scan tab? With ThinkScript, we'd have a lot less to do, to look at for sure. Different things to do, but what I want to start off with first is seeing some of that momentum, price momentum with a very powerful script, but it's very basic and easy to do. It just happens to be powerful. And even if something is simple, it can still be powerful. So for those of you, and we do have a new group of folks in here today within our class for sure, but we are in the scan tab, stock hacker, right there as the sub tab. Follow me now, and I'm going to go ahead and scan. Actually, let's scan first in the S&P 500 right here. I want to just take a look at the golden cross real quick. A lot of times the golden cross means that there have been, bottoms forming previously, and there can be key indicator signs that create that bottom. But this script is going to show us the crossover, and we're going to follow it back in time to actually find maybe the beginnings of a chart and chart indicators with divergences, right? They could have been the beginnings of it. So to get the new group on board with us, what we're going to do right now within the scan tab is I'm going to just go under study right here. So a basic study first, but watch how this opens doors to other indications and with ThinkScript that we can use. All right, next up, we're going to click on pencil right there. Kind of hard to see if you haven't seen it before. Hopefully my cursor is big enough. In the condition wizard that helps us to create this code, even though we might not learn the coding yet. You guys are going to learn some coding today. I've got some key coding examples to share with you, but we are in the condition wizard, which helps us to create code just in kind of an organized fashion with a set of conditions, okay? All right, so first things first, though, this will always default. ADX crossover, delete it. We're going to start with a new condition, add a condition down below. Now, this is just simply a study crossing over a study. So I clicked on, as you see it right there, the list of 4 conditions initially to select. It's an indicator. The indicator is going to be a simple moving average. That's it. It's not going to be a 9-day. It's going to be a 20-day. That 20-day is going to have a specific action associated with it. It's not greater than the 50, building that golden cross. It's not greater than or equal to. It has to be crossing above, meaning it was below, and now we're going to be moving above it. But we've got to also set the other condition over here to put it in place. Simple moving average again. Quickest way to get to those indicators, because there's a whole long list of them, just start typing it in. It'll get you there much quicker. Okay, next thing we want to do, let's just go to length and click 50. We're creating the golden cross very quickly, and we're going to say, not today, not today and yesterday, not today, yesterday, and the day before, not today, yesterday, the day before, like a 4 would be, but a 5 days. So it's within 5 days. It can happen anytime within 1 to 5 days. Save that crossover. That's it. Realize how fast you just built a golden cross to scan through the S&P 500? It can take a long time clicking through those 500. Believe me, I've done that, and I used to do that. That's what that code looks like right there. If you were actually writing out the code, and this is a cool way to learn the code too, just by creating those condition wizards. It can kind of help us, oh, this is how you write the code. Okay, simple moving average, open parentheses, quote, the length equals 20, dot, SMA crosses above the simple moving average, this SMA within 5 bars. That's it. Back to our condition wizard, folks. I'm going to click OK right there. And watch this. All we got to do now is scan. Okay, we just went through 500 companies on the golden cross within a 5-day time frame, and this is what you got. 9 out of 500 that quick. So the golden cross, and let's look at one of these here. In fact, we've got just Dell right there. I mean, it's just based upon its percentage change over here. That's why it's sorting it. But as an example here, Dell. So the Dell chart, and there's Dell. And maybe the golden cross could have been useful here. We don't have too many companies. You've seen technology lately, right? Well, let's see, NDX. NDX has been going flat, but let's say the MAG 7 or the OK7, maybe it's not magnificent, but there's, Apple, Amazon, okay? Others have kind of taken it on the chin a little bit. Netflix, although a recent bounce here, but technology has been under some pressure. You could look around and find that. But look at this. We did this on Dell. Post earnings right there, we broke higher. Okay? Interesting. We're kind of holding this ground. We do trade ThinkScript here too. So we like to look also combining price patterns using indications. But maybe there's a bounce over here. Maybe there's the possibility. I think some of you already are probably thinking what I'm thinking, perhaps, But I'm just going to grab my x-axis and roll it on down here. Excuse me, our y-axis. And what I'll do is I'll just go like this and flip this up and say, well, that looks like it could be, possibly, if it begins to bounce or whatever somebody's looking at, maybe a flag pattern, and there may be a whole lot of additional price movement in store is what some traders might be looking at. Prices, this move has not happened yet, but that's what a flag pattern looks like. And there are some indications of it. Strong post earnings, breaking highs, a serious gap on it there. And this has all been happening under very weak market conditions. What's going on? It could be interesting. So eyes on that. Now let's go ahead and just plot this so we can see exactly what's going on. I've got my 20 already set up here for us just to save us a little bit of time. Here's the 20 and here is the 50. The golden cross, prices crossing above. Did you see it? It has to be a fairly decent size move, and you got it right there. That's when your 20 is crossing above the 50. And thanks to ThinkScript, we got it. Now, folks, once you create this, save it. And then what's really nice about it is you can access it within your watch list columns too. It's not I don't think that's as well known as it should be. Come up top here in that middle hamburger icon, the middle one. Well, right there. Save the scan query. Okay, this is called that's not the one I've got. We're going to take a look at that one I had to build previously for our discussion today, but here you go. You build it, and then if you save it, you can pull it up over here and just find it under a watch list. And every single day that you're looking at setups, like this is one I did the bull flag pattern, in a class, in my swing trade class. It just pops up stocks that might have had the bull pattern as of today, because what it is, it's one of these, like over here, that I built. Bull flag plus K-hold, da-da-da-da-da. All these other kind of setups that we've done previously in this class. If you click on those, you notice over here, do that one more time. You see this little icon right there? Dividend bounce scan, for example. If you just click on that, what it will do is it will load up all the stocks that meet that criteria. So once you got it, and you can access it over here. Now, just a quick note on ThinkScript, because I'm starting to talk quite a bit about it right now. We're diving into it. ThinkScripts aren't guaranteed for timeliness or accuracy, folks. It can be, it's data dependent, very much so. And if there's data that's not working, it wouldn't work correctly either. But my experience is we've got great data here on the platform, but I just want to, highlight that. Not guaranteed for timeliness or accuracy. Funny things can happen with computers, but there is code. It's mathematical in nature. And as long as things are going, the code tends to work out. But I want to state that. All right. Where were we? We were over here. I'm going to clear this off now. Okay. So next thing I wanted to state is I'm going to go over here. And as we go into this, I want to look back on that Dell. In fact, I can share this with you guys if you want. I wanted to really we went through this today just to kind of highlight it, but that's it right there, That's the script. So I think we're good on that. Yeah, it used to be magnificent. It did used to be. They used to call it magnificent for a reason there. Yeah, you might have caught on to that. Exactly. It's the kind of OK Mag 7 now, or OK 7, not Mag. keep wanting to throw that in there. All right, let's go back to our chart. So you can come in here and take a look at many of these. And by the way, you could look at a larger basket of stocks too, like down here, for example. We have the Russell, that's a big one. The Russell 2, gosh, there's the Russell 3000. That's a lot of stocks to look at as well. But I mean, you can knock yourself out. It might take a few more seconds, but believe me, it's fast. And these different columns in here can be really helpful. Anyways, there is your golden cross. Now let's do the upside. We'd have to reverse it to get the downside, and that's not an issue at all. Just reverse what we did. 20 going below, excuse me, 20 going below the 50. Back to our charts. Now, a key thing to note over here, we had a really interesting run. Were there indications that maybe this level of support over here, just in that 110 vicinity, right? It's very, very close to 110. Could we have been finding or building what a lot of people would refer to as a double bottom? Are there other indications that could have given us signs that maybe there's some activities, maybe some buying activity coming in here that's really showing strength? I'll just say double B for short, but showing strength kind of behind the scenes, much the same way an indicator would do for us. And interestingly, there are through some of maybe even some of the more common indicators that you've used in the past. In fact, let's put on the RSI right now. How did we get to this point where we crossed over and we had massive strength here? Let me show you something. Well, here's the RSI, and the RSI measures strength of closing prices over that 14-day time frame. 14 days, always interesting. Wells Wilder, who created this and presented it actually back in 1978, had stated that it's just simply half of a moon cycle. And basically, just put it this way, it's very, very close to half a month, right? A moon cycle is close to a month. And by the way, a half moon cycle is even probably closer to half a month, like a real calendar month. But he's looking at basically a 2-week time frame over here, but it's measuring closing prices over that time frame. It can be very interesting because you're looking at percentages. It does use the close, which makes a lot of sense. Where am I closing relative to the last bar? If I'm getting higher closes than I had over the prior 14 bars, if those closes are getting higher, I mean, by definition, if we're closing higher and higher and closing, are we seeing some strength? We might be, but what's interesting is collectively we could still be dipping a little bit. It's possible. I mean, prices could be dropping, but internal strength, given the RSI, the relative strength index, which it doesn't reference in another index. It's actually the relative strength of. You could say the index is the stock itself. It doesn't reference a separate index. It's only on its own closing prices. Now come over here, and I'm going to show you something that we can spot here with this indicator that we already built, which is interesting because it can help us going forward. But what was kind of the genesis of this? What was the beginning phases of it? Look over here with me. Notice over here, close, lower low, clear, a clear lower low, and a clear higher low on the indicator. That is referred to as positive divergence. And I'll just do DIV. Divergence, that's a long word. All right, positive divergence. One's going lower, that would be price. One's going higher, that would be the indicator measuring the closing strength, or the kind of the internal momentum is a way that, Wells Wilder had talked about it initially, through his materials. Okay? Notice something else comes up. When we start to kind of maybe bottom in price over here, we're virtually at the same price here, but look what RSI did. A substantial increase again. Now that was more substantial than over here. This is a similar price though. These are like similar lows, right? Like a low, like we said before, the possibility of DB for short, double bottom for short here. Could it be? Well, what other indications are we seeing? Boom, right there. That's massive. That's a huge move. And as a matter of fact, we did something even more interesting here. If you really want to dive into this, do you see that? That's a higher high, HH, on RSI above this level. It's a higher high on RSI. Look over here, price-wise. That's a substantially lower high. Something's building in here. Now, that can sometimes represent institutional accumulation, and there are other volume indicators to kind of help us with this. But spotting this is interesting, and believe it or not, we can actually do that with thinkScript. In fact, I want to share this over here with you guys too. By the way, if you guys are getting value out of this class, smash that like button. It just lets us know that these topics are helpful for you in your trading along those lines. And by the way, yeah, definitely give us a follow here too on Trader Talks. I'll just send this out in the chat so you guys have it as well. Love to have you guys on board. I mentioned to follow Kevin Horner on X, Kevin Horner CS. Here's mine right here, Mike Fairbourn CS. Every once in a while, I'll throw in a corny dad joke. That one actually got some likes to it. But anyhow, sometimes they don't. Sometimes those do not get likes, believe it or not. That's not a surprise, actually. But yeah, they're just too corny is what happens. Anyways, where was I going? I was going over here to fold. This is the fold concept here. Now, you're going to find this in the thinkScript Learning Center. And what I'm going to do over here, I'm actually going to copy this and send it through. They have so many great examples, you guys, too, on this. Oh, by the way, yeah, JV mentioned TTM squeeze showed the bounce. Interesting. That's a topic we've looked at before, too. The tightening of the range. It's great. All these indicators, they can be helpful for traders that use them, in terms of expectations and whatnot. But so there's a lot of great information within the thinkScript Learning Center. Over here, of course, you've got thinkScript and tutorials. I'm going to jump into one right now that's really kind of essential to our discussion today in building something like this. How do you get a divergence? How do you see something like this using thinkScript? Because believe me, we just pulled this from thinkScript. That's all we did. This one had a double divergence, which is actually even more rare. I'll introduce that in just a second. But before things get a little bit more in-depth into that, I just wanted to highlight this over here. It's referred to as a fold function. You'll see this in the code that I'm about to share with you guys here in just a second. The code does this. Basically, you get a 1, 2, 3, 4, 5. You can read through these, and there are great explanations to it. The key point here is it's a loop counter going back over a period of time. And all I did today within the script is I said something like this. And I'll show it to you. And by the way, how did I get to learn all this? What did I do actually? Right down here. Example 1 and example 2. And this is kind of a core of how it can be done. This is on price, but you can do it on indicators as well. This example script plots the closest highest price value greater than 40 out of the next 100 bars. So if you're looking, it's going back and it's saying, okay, how many of these were plotting the closest high price with value greater than 40? And so it can derive information by doing exactly what this is doing right here, looping back. I'm going to highlight this for you here in just a second on the script, but it just loops back and says, okay, we're counting a time frame. Now, how many hits did I get on this as I go back and loop back over whatever time frame I'm looking at? In this case, it was 100 bars. It can sit there and say, look, look, look. And by the way, what we're looking at here is in the past. I'll show you how this works, though. Okay, so this is interesting, though. You can just go up here once you do get in into this section, and you can type in a lot of these indicators. But without the fold, I would not know how to do this, actually. I wouldn't be sure how to make this work. Some of you guys that are very good with coding, I'm sure could figure out a workaround, but the fold goes a long way in doing that. Okay, let me show you the fold, but real quick, there's another indicator that the traders will also look at, and it's referred to as the MACD, Moving Average Convergence Divergence. I'm just going to show you guys using the standard defaults here that we've got. And by the way, if I go down here I can actually take the average line. Now, let's see here. Yeah. The average, if I just go to like a 1 up top here, I'm using the actual MACD, uh, the length. Watch, I'll show you what I'm doing. So I'm just looking at the 2 lines, the MACD 2 line right there. And all I'm really focused in on here, I'm not so concerned about the average line coming up, and that was a 9-day average. It's okay. This is a common default. There is another one too, but it's a 12 and 26. We're looking at 12 and 26 moving averages converging and diverging. Say, for example, if we were looking over here and exploring, and let's do this right here. I'll pull this way up so we can really get a sense of that. Notice how that MACD line went down? Folks, there's a signal amplification occurring here. This same technology of MACD, technology using moving averages, it's actually used in radio towers as well to amplify signals and to make signals more clear. And it can be an early sign. And we're actually going to use it even a little bit further along those lines in terms of a divergence. But if you can just kind of imagine here, I'll just kind of draw like a 12 period moving average is going to follow. Do you think this price up here is going to follow pretty quick? Because remember, this is on price. So the 12 period is going to come down faster than obviously the 26. Okay, the 26 will start to come down, but it's going to lag a little bit. And this range up here, now I'm going to draw it down below. So I'm just drawing, this would be a moving average on price, not on the MACD, but just to kind of show you, the 12 is going to be fairly responsive. It's only looking at 12 days back. But the 26 is going to be less responsive. Okay. And what happens is this, try one more colored line. I'm running out of colors here, but you see how these diverge, that massive divergence? In other words, what's happening? The 12 is moving faster than the 26, and this tells us something about what could be happening internally with prices, right? It's an amplification of that move. Now we're using exponential moving averages too, so it's going to be even a little bit quicker. Now, having said that, look at the divergence here. It was substantial on the MACD as well. Remember, we said up on Dell. We're still at Dell here. Lower, 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 low, lower, low, clearly on price. But if we come over here, wow, much higher low, much, much higher low. At the same time, the Dell was making a new low here. That's a substantial difference. Now, one little trick I do, I think a lot of traders might do this too, but just as trend lines can show you a trend flipping quicker, show that trend line right on that MACD. If you start to take out that MACD right there, this is just kind of a value add, folks. There's no addition, there's nothing additional to this. It's a value add. I mean, nothing within the code, I should say. But you see how that MACD starts to break higher here? Okay, it's saying that even though it's a higher low, now we're starting to resume strength to the upside. You see that? Potential strength to the upside right there. It took off from there. And this is another fascinating indication. That was like a similar low, and look what we got right there. So very, very, very interesting divergence. Again, keynote positive divergence. Now, what's interesting about this is these two indicators are completely different from one another. RSI is not equal to the MACD. And that is a nice thing. It's a nice thing. Two separate type of momentum indicators. We're looking behind the scenes, trying to find a positive divergence, and they are different. That can work in a trader's favor because they are different. Now, if they were so similar, you're saying, my gosh, I'm kind of seeing the same thing. Like if I was looking at, let's say, a moving average and a stochastic, there are some similarities there, right? Just in general, you'll often find certain moving averages plotting over time with a stochastic, but these are different, and different indicators can maybe build a better case for some investors that use them, from some traders. So I wanted to do those separately, but what are we getting here? At the end of the day, folks, we are getting a couple things. We're getting positive divergence. There is such a thing called negative divergence, and that means this: prices at similar highs, but you're starting to get the cracks in the foundation, a lower high. You can see that too. We're not talking about that, but it works both ways. I want to open that up, and we could do searches based on both. But positive divergence, folks, on RSI and MACD at the same time. Now, what is that same time? Let's pull up the script right now, and I'll show it to you. Okay, here is the script, and I want to walk through portions of it as well so you guys know how to adjust it. I'll share it too with you, of course. Here is that script though. You can see up top here, what does it do? It uses specifically those parameters, and they can be changed. Again, this is for a scan to quickly find positive divergence, basically times 2, happening over that time frame. Now, these are the defaults. You'll notice the RSI, everything else is the same. We've got the signal length in here, no problem. I just have all of them in here. Okay, this is the key part. You're going to see the fold down here as well. For some reason, I'm not able to maximize this screen. Oh, yeah, there it goes. Okay, there we go. Cool. All right. So down here, I've set up and put a specific node in here so you can adjust the look back period, minimum length, and the long-term length. And there's a key thing that's going on in here. As we go back 30 bars, I'm asking for a minimum required divergence, and we're getting that divergence from, there it is right there. There's the fold. Okay. It looks for MACD value. It looks for RSI value greater than 0. In other words, what we're really doing here in this script is we're saying prices went down. I'll just say P down. And in this case, RSI went up. Okay. We're saying we need at least, and this is a minimum, you're going to see more than this. There are a few in here that are above even 10, and you'll see them with your own eyes, but I had to put a minimum in here. 5 out of, 30. And you can change this. That's the cool thing. I'm going to clean that off. 5 out of 30 bars back. I'm trying to keep this relatively close. I want to see it within a closer time frame of this occurring. All right. And we have a minimum look back period of 5. So I've got, we can go back and we can say, over those 30 bars, we've got 5 hits, and it can be plus 5 plus really, but at least 5 is what we're getting at here. And all we're doing is scanning that, and it is fast. Okay. So I'm going to share this with you right now. This is the script. Again, not guaranteed for timeliness or accuracy, but folks, trying to get back to the beginnings of what may have caused, what I should say, what may have led to a golden cross, for example, that some traders will really key in on here. And by the way, sometimes for really good reason too. Maybe a more intermediate term move, but something came out of this. And by the way, even if I get this, sometimes I like to see the positive divergence occurring as well. Here's that script right there. Okay, I just put it into the chat for everybody. And by the way, those of you that are joining us on the recording, I just put these below in the description section. So just scan to the bottom there, and you'll find it there as well. Okay, but key notes here, wanted to show you how you could change that. If you ever want to change it, you can certainly do it. If you wanted to say, I want to go back further in time with the more longer term divergence, and I want to ramp it up and say, gosh, maybe make it a 10 or whatever. you can change the numbers here, but that's where you change it. By the way, too, you can also change the defaults here on the RSI, on the MACD as well. So click, and what we're going to do is we're going to scan this. I just have it pulled up down here. We're going to scan that, and notice, see how fast that was? That was immediately responded, right? Oh, this is in the NASDAQ 100. I send it to you guys. It's scanning in the NASDAQ 100. What you can do is just change it and resave it again if you want to just shoot for the S&P, or you might just want to keep it at the NASDAQ. You can always change this anytime you want when you get in here. Just to let you know, we just flipped from the SPX to the NASDAQ. All right, so having said that, let's go through and take a look at some of these now. We got Datadog, we got Broadcom. Okay, so don't worry about the up top here, because this is not part of this anymore. We built this earlier. This is not part of the Golden Cross. The Golden Cross likely has not happened yet. Remember, we're searching back to the beginnings of a possible bottom pattern. And you might find this, we've talked about this a fair amount of time in this class, and that's this cup and sort of handle, whatever it looked like over here. The cup and handle type pattern, and really the area is this range there. We're trying to see, hey, was there double DD, I should say PD, positive divergence, and double divergence right there too. RSI, MACD. All right, that was the focus, the emphasis here. Datadog. We got a double divergence. Can you see it? Now, this has been incredibly strong, this stock. You have to say, this has been a strong stock too over the last couple of days. Markets have been doing what? We saw the markets dipping. Right. Well, it's coming down now, especially, some of the tech stocks have dipped, but look at this strength. Where on earth is this strength possibly coming from? Well, we've been getting some positive double divergences right here. Folks, lower low, lower low, lower low, higher high, higher high, higher high, higher, okay, higher high, higher high. I shouldn't have said higher high here, but we had a couple of them. Check, check. This is not just double divergence. This is a double divergence on each one times two down here. Now, does it say get in now? Traders are looking at a lot of different things. They say, maybe I want to change in trend, but maybe it's a watch list because we're getting some of the beginnings of what we like to see down here, right here, right? We're seeing some internal strength based upon these two indicators. And some of the earlier changes too is, kind of seeing this already with it. This price action may be kind of, oh, there you go. A little bit of a trend line break just barely happening. I'm just saying, what is this leading into? Now you guys can spot it very, very quickly with that code, and you can change it. You can alter that script, whatever you want to do. Anything on there to change it. There's Datadog. Okay, so it may be somewhat, by the way, some of you guys will see different things in here too. Bullish. Look over here with me, guys, right here. See this? Look at that. That is kind of like a shoulder. Now I'm just looking at price action. Shoulder, head, shoulder, right? Inverted head and shoulders pattern, or which are also referred to as a head and shoulders bottom pattern right there. Okay. Bottom pattern. So you're looking at maybe what we might have already had the trend line break off that too. Just looking at the tops. Yeah, in fact, we did. So it's already broken that. If it's going, we don't know if that's the case, but those are pattern retracements there as well. I talked about those in my swing trade class too, but all right. So we got that one. We also had ADSK. Autodesk was in there, wasn't it? Autodesk. Oh, this is the wrong one. I had it over here. Yeah. ADSK. The first one I just showed you guys was the one we just built ourselves, that we all just built in class. Autodesk and Broadcom. Okay, cool. So here you go down here. Oh, so this is looking back. You got that RSI, right? There was a double bottom there, but hey, you got to say, remember, this is not looking at price action at all, but we did get a price follow through. There was something interesting that happened towards the bottom. It was small, actually not that small. Look at the RSI. The RSI has been bottoming actually since here, but wait for prices to maybe get a double bottom, a bounce, a break above this range for an indication. Has nothing to do with prices. Prices followed this, so kind of interesting. One last one, and I'm going to say the homework for you guys is to go back in and take a look at these. AV, AVGO. Look over here. Oh, wow. Okay, so I'm just going to say it this way. Similar lows, higher, high, higher, high. That's your double divergence working for you in terms of what the script's supposed to do. Cool, everybody. Well, yeah. Hey, again, once again, if you're finding this information helpful, let us know. Smash that like button if you liked it. You got to like it first. Again, love to have you guys follow us on our Trader Talk channel right over here. And be sure to follow Kevin on X. Got some great classes as well. Some of his playlists here are fantastic. There's a Trader Talks channel in the morning. Encourage you to take a look at that. This class too that I do over here on swing trading. We do talk a lot about the ThinkScript stocks, but over ThinkScript sort of setups and scenarios, but we talk about it over a swing trade time frame. Oh, I did not mean to hit that. What I tried to hit was this right here, the playlist. So this could be helpful if you guys are interested in learning more about kind of that specific time frame of trading ThinkScript. I'll throw this into the chat as well, just so you have it. And with that all, take a look at those scripts and see, check those out. See what you can find in terms of potential bottoms occurring where there might be, again, future price strength. That's what you're seeing with divergence. We just did a double today, a double whammy, in terms of, well, a double divergence, folks. So on that note, appreciate it, Kevin, very much. It was great to see you all and have you here today. Look forward to future discussions with you. And you guys have a great rest of the day. See ya.